Welcome back. So we're expecting a positive to flat sort of a start. The implied open is, of course, much better off. GIFT Nifty is more or less unchanged. Let's kickstart the market conversation with Prakash Diwan, who's with us on the show. Prakash, good morning. Hope you're feeling bright and sunny this Monday. So tell us, a lot of earnings have come through, but I want to talk to you about a few stocks beyond earnings, and actually Siemens is one of them because it's a big corporate development, right? Minority shareholders saying that they're not going to take things lying down, and they've shot down this proposal from an MNC. How do you read through it? And what about the stock? Do you think this will still continue to be a bit of a, sort of a sour taste in the mouth? Or do you think it's time to lap up the stock because it's underperformed exactly because of this reason?
Good morning, Surbi. Yeah, thanks. I had a lovely weekend, and hopefully the week also should go ahead well. So, I think specifically on the way this entire episode is panned out, and remember, this is not the first time that Siemens, the global parent, has done something which is to move a lot of the businesses into its own privately held, entities rather than let the listed entity minority shareholders also gain out of it, right? We've seen that happen in the past. So it's something which is more of a management propensity to do these things. It probably stems from whatever conservatism or insecurity on how things pan out in some of these new businesses. But I think it's unfair, and rightfully minority shareholders are not taking it lying down, which also means that the stock would probably, it's already lost some ground when all these things started off, and it's finding it extremely difficult to catch up. So, to specifically the question of whether, this is the time to latch on or load up, I don't think this is a Maggie moment for Siemens in that sense that, there's something which has gone wrong and you could kind of get a price correction, which is a great entry point. At this point, at least it doesn't seem like, and I'll tell you why. The area that they're talking about is high volume business. Okay. And that's where, you start getting newer relationships or deepening your existing relationship and sell the higher end products. So it's something which is kind of unfair to carve out of the core business, the listed entity. But the other challenge that Siemens would face with investors particularly is there's so much good happening in terms of the cyclical move in cap goods, particularly related to the electricity sector, that if you blink, you have other options that investors will really move to. And that's exactly what my anticipation is going to happen in this case.
Okay. Prakash, hi, good morning. What would you do with two stocks? What do you like in these two spaces, which have been doing very well? Power, the stocks all rallied on Friday, and pharma, which rallied on Thursday and Friday after the Cipla numbers specifically.
Good morning, Prashant. So let me take pharma first because I think that's going to be talked about for a few more weeks for sure. So what's happening is, there's a very significant underlying turnaround in sentiment towards the large generic players in our country, and particularly the US market, which was the bane in terms of pricing power and competitive intensity. This is actually kind of turning around or has turned around or given indications thereof. So I think the larger pharma companies will do extremely well. But at the same time, there's a whole clutch of mid-cap pharma companies which could not necessarily be in the generic space directly, but which also are in that same ecosystem and which would start benefiting from a change in mood, a re-rating of sorts, which is happening. And it is an under-owned sector, let's face it. I mean, there is absolutely no reason to believe that people are already fully loaded onto this sector. So the allocations could go up and earning expectations. So, even small companies like Syngene and Glenmark and all of them have been giving you very clear indications that they've got their act together in terms of rate focus, margin growth. All of that's kind of falling in place. But look at the large cap pharmas first at this point in time for the next quarter or so, and then you'll have the mid cap pharmas also participating. So, Divi's Lab, for instance, I mean, it's come back. Dr. Reddy's is at probably from a valuation perspective, one of the softest in so many years. So you have enough room for improvement out there if you missed out on the Ciplas and Sun Pharmas of the world. So there is a lot of interest, which I'm sure is going to happen. On the power sector, I think I would believe if you look at power equipment, that's the space where you'll continue to grow. So what's happening is the PSUs are leading the charge in terms of the government's ambitious plans to execute a lot of the electricity production build up, and all the manufacturing vendors who actually participate in that are looking at order books with very decent margin growth, with raw material costs being benign. So it's a very good setup for them. So I would focus a bit more on that side. I mean, you've seen the numbers from APAR and all of that. So look at that space rather than the generators.
Sure. As we head into the pre-opening rates, we have market expert Prakash Diwan still with us. So gives us some time to chat about individual stocks. Prakash, I wanted your thoughts on Marico. You know, the company is quite confident and they've in fact raised their guidance on margins as well. I was going through the trajectory of the stock. In the last 1 year, the stock has done nothing. It's just up about 10%. I mean, given the kind of market momentum, do you think there's more headroom now, given the management confidence as well as the stock performance you've seen so far? I can't hear you, Prakash. If you can just unmute yourself.
Yeah, sorry. So I just want to tell you that this is one space that anyways is underinvested by and large, you know, by most investors. We've not seen a rush towards FMCG except for a few names. But, you know, Marico has been plagued with so much of raw material price issues in the last 1 year, at least at the beginning of last year, that they've just kind of got over that. And I think the management confidence stems from the fact that their price points and their product range is probably more resilient than a lot of the staples that have got impacted. So from that perspective, if both these factors work as a combination, I don't see any reason why the performance can't come back. I mean, it's a brilliant franchise. We've seen all of that in the past. It's just that it's gone through a low phase of, struggling with revenue and with margins. But that could change dramatically as things pick up in the rural economy. So I'm quite positive on this. But it's a question of relative superiority within this entire space. So if you want to buy into a Marico versus an HUL or an Nestle, that's the call. But definitely Marico seems to be coming off the out of the woods and getting into some brighter spots.
Prakash, very quickly, a couple of names. One is Route Mobile. I'm assuming you heard the conversation. Yes. What would you do with it? Supreme Industries sold off some 8-9% on Friday. Numbers came out. Volumes are very strong, but I think realizations were a bit weak. Stock's done well. Any thoughts on Supreme? And then a recent listing, one of the few which is far below its listing price still, Senco. For the first time on Friday, it saw signs of activity. The jeweler from Calcutta. Go on. 3 names.
So Route Mobile, I think it was a brilliant conversation, gets a lot of things cleared. I would wait to see the new management come in and actually draw the roadmap in terms of how they're going to build the business from here on, because it's already priced in. The business is rewarded investors, but we need to now look at how things shape up with this new change. So I wouldn't buy into it at this point, but be patient. On Senco, I think it's more to do with a flurry of interest that came through with Tangamil, with some of the other names, Kalyan, all of that. That this is also kind of been Senco lapped up, at least in the IPO. But I think it's priced a bit steeply as compared to the scale that it has. There are far better names in that area, Prashant. So I really won't want to look at that. I missed out on the third
Supreme.
That you
Supreme Industries.
Supreme. Okay, so Supreme is the one that you could probably go ahead and buy. I'll tell you what is changed there. The mix, the revenue mix is not just only from the plastic space. Okay. I mean, there's a huge move in the industrials. That's
Prakash, I'm so sorry to come in over there, but we actually have an earnings embargo. We'll come back to Supreme in just a bit in those earnings.
Prakash is still with us. Prakash, you heard the M&M. I'll come to you on this later, but you were talking to us about Supreme. So please finish that point.
Yeah. So what I could sense from the number from Supreme listing is interaction that the new thrust of the area of growth is going to be industrial. So which is far more resilient in terms of margins. It's got higher value addition from the company. So in a way, whatever the company's gone through in terms of its own evolution, and that's evident in this quarter, is something which resets it for a different trajectory. So I think the sell-off was probably, more because, there was no explanation beforehand in terms of, why this would happen, why the numbers would probably be a sort. But that transition is what's probably evident, and that's exactly where things would look up. So I'm quite positive on that. On M&M, I think, M&M Financial particularly, I think the situation is very tough for people who are already invested. The answer to a question whether it's good enough to invest at this point, the answer is not yet. You'll have to see all of those things, that improvement that he's talking about actually pan out, which could very likely happen. But for people who are already invested, it's a little bit of a challenging environment because credit cost is something which is not going to come off very easily for most of these NBFCs. And the environment is getting much more competitive in terms of getting into that segment, which is promising enough on margins. And you know the reasons. We've got a new player coming in. There's disruption likely. People will follow suit, change strategies, reprice themselves. So there's a lot that's happening on the NBFC space, which could take some time before the real worth of all these businesses come to Prashant. So I would give it a pass at this point in time to invest afresh. Or if I'm invested, not add to it. We'll probably hold on for at least 2 quarters and wait for the second half, as Shaya said, is more promising for the business also.
Okay, got that, Prakash. Thank you very much for staying with us throughout pre-open. Look forward to connecting with you again. The pre-open